Which are the 5 common GST mistakes made by new business owners? Starting a business is exciting, but GST compliance may be difficult. Let's see 5 common mistakes which are made by new business owners and how you can avoid them. First one is not registering on time or registering under an incorrect category. Most of the people think that they have to take GST registration only after their turnover crosses a specified limit, broadly 40 lakhs for goods and 20 lakhs for services. However, in reality, one has to take GST registration even with nil turnover in certain specified scenarios. For example, if you are into interstate supply of goods, or if you are an e-commerce seller, like you are registered on Amazon and you are selling through Amazon, you are an input service distributor, and so on. So for these specified scenarios, one has to take GST registration even if their turnover is zero. Late registration does not erase liability for GST. Let's say your turnover reached 40 lakhs in March 25, but you do not take your GST registration till September 25. So, for your turnover between March 25 to September 25, are you liable to pay GST? The answer is yes. Once you are registered in September, you have to discharge your entire liability on the turnover between March 25 to September 25 along with interest. So delaying registration will not erase your liability for GST. Another limitation is people opt for composition scheme without understanding its limitation. A composition dealer is not allowed to take ITC. Also, those who are involved in interstate trade, they are not permitted to take benefit of composition scheme. So sometimes people registered under this scheme without understanding its limitation. Second is failure to file GST returns. Sometimes people take GST registration voluntarily just to show credibility to their customers, or even there are scenarios where bank approaches us and request us to take a GST registration so that it is easier to open a bank account. People take registration but then forget to file GST returns. One has to remember, once you are registered, you have to charge GST on all your invoices for taxable goods and services. You have to discharge your GST liability on a monthly basis, and you have to file your GSTR1 and GSTR3B on a monthly or quarterly basis as required by law. Even if you have zero sales, a nil return is mandatory. So once you are registered, please start filing your returns immediately from next month onwards. Non-filing would result in late fee, interest, and even suspension of GSTIN in some cases. Third is incorrect classification of goods or services. Applicable GST rate would depend on HSN or SSE code assigned to the goods or services in which we deal. Incorrect code application would mean underpaying tax leading to penalties or overpaying tax leading to cash flow hit. Why these classification errors happen? One reason is confusion between similar services. Let's take the example of healthcare services, which is mostly exempt, and wellness therapy services, which is taxable at the rate of 5% without input tax credit. So confusion between similar services can be one reason because of which there can be application of incorrect rate. Or second is missing GST Council rate updates and continue filing under old rates. Third one is, which is a very commonly seen mistake, is not differentiating between composite versus mixed supply. Composite supply is where naturally bundled items are supplied and one of the item is principal supply. Let's say laptop sold with warranty. In such scenario, the GST rate of the principal item will be applicable for the entire thing. So the laptop as well as the warranty service will be taxed at the rate of laptop being the principal supply. Second is mixed supply, where unrelated items are offered together for a single price. Let's say a bucket of combo of chocolate and cold drinks is sold together. In such scenario, the highest rate which is applicable in the combo will be applicable for the entire package. So in our example, between chocolate and cold drink, whichever has a highest GST rate, that rate will apply to the entire combo. Next is incorrect input tax credit on ineligible expenses. ITC is strictly for business related expenses. You cannot take ITC on personal cost. Then ITC on certain items is specifically excluded, like ITC on cars or other vehicles is blocked unless they meet specific criteria. Like if you have purchased a car or a bike and you are using it for transport of goods or for passenger services, or you are into car rental services, or you are into driver training. In these scenarios, you can take ITC on purchase of car, but otherwise for normal businesses, ITC on car is not allowed. Similarly, expenses on gym membership, sports club fees, or recreational services provided to employees are treated as non-business expenses and ITC is not allowed to them. And this is the most common one, errors in reverse charge mechanism. Businesses often miss on reverse charge mechanism obligation. What is a reverse charge mechanism? Here, the buyer or the service receiver has to discharge GST liability instead of the seller or the service provider. List under RCM gets regularly updated by GST Council, and one has to be aware of the latest changes in the list. Like in October 2024, commercial rent paid to unregistered landlords was brought under the ambit of RCM. So now, if you are paying rent to an unregistered landlord, you have to discharge the GST liability, and later on you can take a ITC for such GST payment. Similarly, like if you are paying legal fees or paying transportation charges, imports, etc. from unregistered dealers, you have to discharge GST liability under RCM. So we can conclude GST mistakes are common but avoidable. Register correctly, file on time, and classify correctly. Claim ITC carefully and stay updated on RCM changes. Last but not the least, subscribe for more GST insights.